Jim, it's been quite a week so far. We've gotten through the election. There are still things in motion and races to be determined, but overall, the financial markets responded quite favorably to the news about the vaccine. What are you seeing on your dashboard of things that the market is looking at and interpreting?
Well, Nathan, it sure was a relief to get through the election. The vaccine certainly was the biggest news at the first part of this week. The expectation that that's going to be delivered in a pretty timely fashion is what's driving things higher for sure. I think the other thing is that the end result, most likely, of a divided government in Washington is almost thinking that the status quo and not a lot of things that are going to upset the current recovery that we are experiencing right now are going to happen moving forward. Those, to me, are the two biggest things driving markets this week.
We've been hearing about a V-shaped recovery, and I think we can say V stands for vaccine in terms of its impact on financial markets. When you look at what's happening in the US politically versus what's happening with the virus and developments around the vaccine, what do you see the market putting more weight or credence on?
There was a lot of attention, obviously, in the fall to the election, but I think out of the election season, focusing on the keys like number of cases, is that going to have some sort of effect with another shutdown? The vaccine obviously is something that's quite important, but obviously we're going to be looking at another stimulus or relief bill coming out of Congress, which the market is already pricing in. That is going to be an important factor as well.
And what things should investors have in mind? Any change of strategy, or what do you see happening in the coming months and years?
Well, we continue to say a real solid financial plan is the backbone of your investment strategy. Those two things are married together. So it's obviously important to see if anything's changed in your personal philosophy. But we continue to think that stocks on a relative basis are tending to be outperforming over the next 12 months or so. We still obviously like the global diversification, but on a relative basis, staying invested in the stock market over the next 12 months is certainly something we see is going to be positive for clients.
Good perspective and good reminder. Thank you.